I have an order to buy above this inside bar, just got filled. And then I canceled my order to buy below it. I was gonna, if it went down first, I was gonna buy below it. If it triggered the buy, I was just gonna buy above it. So I'm long 10 shares above bar 3. It's also a type of second entry sell. First entry triggered here, pulled back, and then got a high one, which is, you can see it as a high one or a second entry buy. Yesterday's low and Tuesday's low seem pretty important, both at the same prices, at 336.60. So it's possible that we just test there and reverse. So I'm going to take off half at yesterday's low and see if we accelerate up. If not, then I might take the other half off there as well. We got filled on half. And now hoping for a strong breakout above yesterday's low. I ended up closing out the trade. It is a 6-bar bull macro channel, but it's also a type of spiking channel. So we had a spike up, pull back, and then the bars are getting smaller, and we're around yesterday's low. So it didn't have the big breakout that I wanted. There were bars closing on their highs, so that was definitely a positive, but because the bars were kind of shrinking after the initial 2 bars, it was kind of a spiking channel, and I thought we might have to pull back 50% of the way down or down to this low and get a trading range first. So because we didn't accelerate, I just took it off there. So up 297. I sold below this bear bar, thinking potential final flag. So I might have to test to the middle of this final flag. Double top. So 3 pushes up, breakdown, and then second entry sell. I'm a little upset about this trade because this whole time I was thinking, let me just wait for the breakdown. Just wait for a strong bar and then look to sell a pullback or sell a close. And I ended up selling below this bar. I think it's okay, but I don't want to. I'd rather take a higher probability entry. So, and I don't know how I ended up in the trade, because I was, in my head I'm thinking, I'm only going to take a breakdown. Let me wait for 3 consecutive bear bars or a strong breakout bar, bulls giving up. And when I saw this perfect bear bar, I thought second entry sell. Micro double top, 3 pushes up here, and second entry sell, so maybe it's worth taking. And I took it. But after I got in it, I remembered that the whole time I was saying I should wait for strength, bear strength, or at least bulls giving up. So I don't like that I'm in it, and I also don't know if I should just get out and wait for the breakdown. I just ended up exiting at my entry. I think I made 2 cents. It's crazy that 2 cents is $1.20 with 60 shares. It's a break-even trade, and I'm up $1.20. I'm still like, and you can probably tell that I'm not used to these numbers yet, and that's why all my winners are so small. I'm not really trading with the size I should be, and I think that's because, especially in this phase, I haven't been trading full size. I rarely ever take a 60 share position. So to make $1.20, which was a good day for me 2 months ago or 3 months ago, to make that on a break-even trade is just, I'm not used to seeing that. And what I was saying was, especially in this phase, because I haven't really risked $25 per trade, because I fell so far behind on those 2 losing days. I was down $40, and so on the way back up, I just didn't want to lose another trade and take another full loss. So I was trading really small, and so I made my way back up with $1 and $2 winners, but I was always trading like a fifth of my max size. And on any given day, whatever phase I'm in, like right now I'm doing $25 per trade of a max risk. My first entry is always going to be probably risking $10 or $15, because like for this trade I risked $10 because I knew that after 3 bull bars, even if we pull back for 2 legs, I'd want to buy more. So that I think is reasonable. So my first entry should be risking $10 or $15. But what I was doing for most of this batch is I was risking $2 or $3 because I knew that I could stomach a $3 loss, but I didn't want to take a $15 loss after losing 40 bucks. So I was trading scared for most of it. So these numbers are still really big for me, and so I might have to redo this phase, risking $25 per trade and actually risk what I'm supposed to. So consistently risk a max of $25, and that might mean first entry being risking 10 or 15 and then leaving room to scale in. But the first entry should be risking 10 or 15. I shouldn't be risking $1 on the first entry or $2. That's just trading scared. So I might have to redo this. But in any case, for this trade, I wanted to wait for the breakdown. It's just a very tight channel, and it is a micro double top and a second entry sell after a potential final flag. But I wanted to wait for the breakdown. And so if I didn't wait for it, and if I got stopped out on it, then I would really regret it because my intention was not to take this low probability entry. So I'm glad I got out break even. It was hard because it was going against me, and that's when I started to feel upset about it because I knew I shouldn't have taken it. And then when it started to come back down, I was thinking, why don't I just stay in? And that's kind of how it plays tricks on you. But when it came down to my entry, I knew that this is not the trade I want to be in. So just took it off, and I'm glad I did. Just got out break even regardless of what happens here. And I'll look for the next trade. I bought above this bar. I saw it as a breakout of a bull flag and then an I buy signal, breakout pullback, and then a bull bar closing on its high. The struggle is that I know if I get stopped out, I know what I'll say, that I bought high in a tight trading range. But at the same time, it's both. It's a breakout pullback after a strong breakout of a bull flag, and it's also buying high in a tight trading range. So me knowing that it's a mistake, me knowing if I get stopped out, me knowing what the mistake is doesn't help me take or avoid the trade, because I think there's a valid reason to buy, but there's also a valid reason to not buy. So I'm not really sure what the conclusion would be regardless of what happens. My reason for taking the trade is that normally after 7 consecutive bars without a pullback, I would buy with a limit order. And what I'm trying to do more of, or less of, is I'm trying to do less of limit order buying in these kind of situations, and I want to wait for some kind of evidence of a reversal. So if I'm going to buy this low, instead of buying this low, if I wait for a pullback and then buy this high instead, I'm buying at the same price, but I was able to see some kind of consolidation. So if I'm going to buy with a limit order here and put my stop down here, or if I'm going to buy above here with my stop down here, I'd much rather do that. So instead of buying above here because we didn't close on the high, I bought a breakout pullback. And so that was my reasoning for it. So if I get stopped out, I'm trying to do the right thing, but I know the answer for the reason why I got stopped out. But then what do I do? If I don't take the stop entry, I don't take the limit order entry, then I'm stuck. So I have to do something. And in this situation, I thought it was reasonable to take the buy. But I guess that's why it's a swing buy. It's because there's a reason for both. If I get stopped out, there's a reason I got stopped out. If it works out, there's a reason it worked out. And so that's why it's not very high probability, but we could get a strong breakout out of it. So we'll see. If we don't get a significant bar on this bar, closing above these highs, then I'll probably look to just get out at the close of the bar. So we closed at the high and not above the highs. Because of the uncertainty, I was really looking for a lot of strength there. And if it closed on its high, I would have stayed in and then taken off half at the high of day and seen if we got a big breakout. But because it was two-sided and we didn't close above there, I thought it'd be best to get out. I think it's still an okay trade to be in, but I'm not in it. So I ended up getting out with 4 cents, and 4 cents on 30 shares is $1.20. So I'm at 5.37 now. Right now it seems like a lot. Those break-even trades being $1.20 seems like a lot, but it's only because I haven't been trading my full size. But if I am trading 60 shares consistently or more, then every break-even trade will be $2 approximately, like around that, give or take. So either +2 or -2. So if I'm doing it consistently, I'll get used to it. But right now, because I haven't been consistent with the bigger size, it seems like a lot still. So at 5.37, yeah, I'll see if I can find something else. So I missed the breakout. Now we have a breakout pullback, high one buy. I think that's a reasonable buy. So if it closes on its high, then I'll buy above it. And I am trading my full size, close to it. So 40 shares, and down to here, risking a little bit over $20. So a full size trade, and see what we get. When it pauses below my entry, I always feel like I'm gonna get a bad fill. Okay, got filled. I'm gonna look to take off half at 20 cents if we get up there. If this bar closes on its low, it'll be a second entry sell, so I'll exit below it because it's the micro double top. I think it was an okay trade because it's a bigger bar. So if it was just a small breakout, this could be seen as a final flag. But because it was a bigger bar and a high one, it was an attempted top here. It was a double top lower high that didn't succeed, and we broke above it. So breakout follow through. I think we should get some follow through. I'm gonna move my stop up below this bear bar. Micro double top, second entry sell. If it closes near its low, I think anywhere around its midpoint, I'll do that. So move my stop below the bear bar, and I'm looking to get out break even now. So if it goes below, I'll get stopped out for a 10-cent loss. So I moved my profit target, or my sell limit order, to 2 cents below the high one buy signal. So I'm willing to take a 4-cent loss. I don't know if I should take a loss on those because it's not really, I guess it's okay to take a loss because it is a micro double top and it's not what I wanted to see. So taking a 4-cent loss is not a big deal, but I don't know if I should take it when the stop is just 10 cents or 8 cents below that. So I don't know. I'm not sure. I'm okay with. I'm like in the groove of taking small losses instead of taking bigger ones. So if that's my biggest problem right now, then I think that's okay. So I lost 5 cents on 4 shares, so $2. So back down to 3.37. That's an example of what I was saying. When I'm trading bigger, these break-even trades it's gonna fluctuate $1 and $2 at a time. So I have to get used to it. But I thought it was okay. I'm gonna try to find an example of what I was thinking about. But as I was in the trade, and it wasn't really racing up the way that I thought it would after a setup like that, and that made me think about the reasons why it makes sense that it's not going anywhere and that we might be topping. Try to find a couple examples here. So this one is kind of like today. It's not exactly what I had in mind. And the reason this one's different is because here we have a triangle and we have a failed breakout below the triangle and then a double bottom here. and then we start to push up to form a double top here, and then we break out of the double top with a breakout and follow through. But that's not exactly what we have today. It's a little bit different. Today we just have a small double top. We didn't break below the triangle first, so I think that lowers the probability. So the two examples I was thinking of are this one, which is actually not exactly the same thing as today, but it's similar. Now we move down, top, and then attempted second top, but we get a strong breakout tail, but form a high one, and it's a buy above the high one because it's a strong enough breakout. I actually don't know if it is a buy above the high one, but in this example it is. And then or this one, buy above this high one for a measured move. The other example is similar concept. So here we have move down, attempted top, second attempted top, but instead of the attempted top, or instead of the top, we get a breakout and then high one. So buy above the high one. These are both below the high of day, but it's a high one. So you could have bought that, or you wait for the stronger breakout, follow through, and then there's a buy above this bull bar, and again for a measured move up. That's different from today because today we actually did get the top, and then the breakout and high one. But it's still the same. It seems like it's the same concept. I think that the main difference today is that those ones were happening as the initial move. Like we gapped up, but we were creating an opening range. This one is 3 pushes into the bull trend. So it's already been trending all day. So we're at the end of the day right now. So that's what made me quicker to exit. But I think taking a chance on it is okay. I don't know, to be honest, because the context is different today than it was in those examples. I don't know if I should have taken it in the first place, but I got out with a small loss, so I'm okay with it. And I think I'll be done for the day. I'm finishing 337.